Hello everybody. In this video, I am going to discuss one important topic in GST, which is applicability of GST in case of transfer of business. In case of transfer of business, the successor will be liable to take GST registration and pay GST on all activities after the succession is taken, whether in the form of amalgamation, demerger, or any other form. If the succession is taken, the successor will be liable to pay GST, and for that he has to take the GST registration. We will see the concept in detail. According to Section 22, Subsection 3 of GST Act, where a business is carried on by registered taxable person is transferred, the transferee or successor will be liable to be registered with effect from such transfer or succession. In case the transferee is a company, then the transferee will be liable to get registered under GST Act from the date on which the registrar of companies issues a certificate of incorporation giving effect to such order of the High Court or Tribunal. That means if transferee is a company, then the company will be liable to take GST registration from the date on which the company gets certificate of incorporation from registrar of companies. As far as input aspect is concerned, Section 18, Subsection 3 of GST Act, as well as Rule 41 of GST rules, stipulates that in case of change in constitution of the registered taxable person on account of sale, merger, demerger, amalgamation, or transfer of business, in that case, the successor will be liable. The successor will be allowed to transfer that unutilized ITC of the transferor. In case of amalgamation, for the amalgamating company can transfer the ITC, unutilized ITC to the amalgamated company. The amalgamated company has the right to get the ITC transfer from the amalgamating company. So the successor will be allowed to transfer the unutilized ITC of the transfer. In that case, the successor, that registered person, will be required to furnish the details of sale, merger, demerger, amalgamation, lease, or transfer of business in any other form. That the details are required to be furnished in Form GST ITC2 electronically on the common portal, along with a request to transfer the unutilized ITC lying in his electronic credit ledger of the transfer. Along with the request to transfer the unutilized ITC lying in the electronic credit ledger of the transfer to the electronic credit ledger of the transfer. In case of demerger, a special treatment will be given to ITC. The ITC shall be apportioned in the ratio of value of assets of the new units as specified in the demerger scheme. And also the transferor shall submit a copy of a certificate is being issued by a practicing chartered accountant or cost accountant certifying that the sale, merger, demerger, amalgamation, lease, or any other transfer of business has been done with a specified provision for transfer of liability. liabilities should also be transferred. We see the aspect of sales. When the assets are sold in case of transfer of business. When only assets are sold, business is not transferred. In that case, under merger or amalgamation, value of each of the asset will be calculated separately. This itemized sale, itemized assets is being sold, it will constitute a supply under GST, and GST will be leviable on the itemized sale. When the goods, the assets which forms part of business, it is being transferred or disposed of under the direction of person carrying on the business, so as it will no longer form part of those assets. When it is transferred by that person carrying on the business, whether or not for consideration, then such transfer will be considered as supply of goods by the person. In case the goods are not transferred, the assets are not transferred, but the person carrying on business, he will transfer the right to use the assets for any purpose, which may be personal purpose or any other purpose other than business. Then such transfer of right to use that asset, it will be considered as supply of service and GST will be leviable. Then next situation is that when a person ceases to be a taxable person, then any asset forming part of business carried on by him, it shall be deemed to be supplied by him. It is a deeming provision. It will be deemed to be supplied by him the course or furtherance of business immediately before that person ceases to be a taxable person. So here the transfer of, in that case, the transfer of goods only will be subject to GST and the transfer of business will not be subject to GST. Then we'll see in case of slump sale, when lot of assets are sold altogether. It may be full assets or partial assets. Full assets of the organization or partial assets of part of the total assets of the organization, it will be sold altogether. Not individually, it will be sold altogether. In that case also, it will be considered as a supply under GST. It will be treated as if the assets are sold item-wise. The same treatment will be given in case of slump sale. This transfer will be treated as supply and GST will be payable. The last situation is transfer of business. Here, when the business altogether is transferred, not only the assets, but the whole business is transferred to another person. The new person carries on the same business as previously done by the transfer. In that case, this transfer of business, as per notification number 12/2017, General Tax Rate, dated 28/6/2017. This service which is provided by way of transfer of a going concern as a whole or an independent part thereof, it will be exempted from GST. Here, in case of transfer of business, there is no GST as it is exempted as per notification number 12/2017, General Tax Rate dated 28/6/2017. If you like the video, please like, comment and share the video. For more updates, please subscribe to our channel. For further notifications, please press the bell icon. Thank you.